afternoon. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good afternoon, Peter.
Hello, Andrew.
Welcome back. The domestic market, not a huge amount happening, so we'll go straight up to Japan. The yen, weak, extremely weak.
Yes, it is, 30-year low, and not only is it weak, but do we see intervention, Andrew, from that 152 handle? Everyone's saying we had such a big week last week, going from 0.1% negative to zero, and we didn't expect the Bank of Japan to have two big breakouts in the same week. You don't want that for Japan. So possibly this week you could see something which wouldn't surprise us, considering it's that Easter week.
Yes.
The FX markets are open Friday, but remembering it's going to be end of week, which is a Friday, end of month and end of quarter.
True. Interestingly though, you got extremely weak yen.
Yes.
But a super strong Nikkei.
Oh, isn't it on fire? Absolutely. I mean, that chart, when you study that, for all the viewers out there, please study that chart, because if you look at the NASDAQ in red, it's been outstanding over the last 16 months. Put your mind back to really the end of December 22 and just one-way traffic. And then the Nikkei, it's back, it's nearly at 41. And it's got everyone saying it's going to be a 45,000 handle. Take up the S&P 500. Everyone's saying it's 6,000.
Yeah.
So there's plenty of momentum there. Those, the three markets that are down there at the bottom, Andrew, are Nikkei, S&P 500. That's through 5250.
Yep. Every
chance you're going to see a 56 handle very, very shortly, and then 6,000 is where they're saying by summer.
Yeah, and the irony, I think, is where the Nikkei has been so strong, yet on a PE basis, compared to the S&P, it's looking cheap.
Yes, it is. And it's looking cheap for a couple of reasons. One is you're getting 5% out of the US market in the sense of putting deposits in versus zero, negative 0.1. So you've gone now to zero. And you've got to take into consideration the strength of the US dollar and compared to a very, very, very weak Japanese yen.
I know, interesting markets.
Yeah.
Staying on interest rates, Swiss franc, first dominator fall in Europe.
Yeah, the Swiss bank with the Swiss franc.
That's right.
Yeah. Well, looking at that chart and what you've seen as a capitulation going back to January 1, it's like that, if you very rarely do you see a chart that pinpoints the start of the year and it just goes boom, hits 0.84, and now you're nearly at 0.9. Yeah, very, very weak as far as that Swiss franc, and I think that it's going to be an interesting, again, market, how it trades over the next couple of weeks.
Yeah, and you would sort of think their rates, because their inflation is very much under control.
Yes.
Is there more room for those rates to come off?
That's right. Well, I wouldn't be surprised. We've just got to wait through that and see how it all materialises, because many other central banks, as we know, are going to cut rates sometime in 24.
Yeah, that's right. Over to the UK, CPI number came in 3.4, down from 4%, which is a good sign, but plenty of weakness in that UK economy.
Yeah, you bet. And I don't think Bailey's going to do anything soon as far as the governor of the bank, Bank of England. When I think through it, there's every chance you're going to see probably a rate cut, but I'm not sure when as far as timing for the pound, because they really could do with something now. They need an injection. It's hemorrhaging.
That's right. And particularly in your retail sales, the GDP numbers in the UK are coming out this week as well.
Yep.
Retail sales, the chart tells that story where it's pretty dire.
Yep, very dire. And that tells you the health of the economy. And when your retail sales are submerged like that, it's tough time ahead.
Yeah, and that's going back like 2 years as well. So
yeah,
pretty rough. Finally, where should we put our money?
Well, rare whiskey's looking good, Andrew. I just want another nip of that McGuire Scotch.
10-year chart, rare whiskey, 280%.
Yeah,
not
strong,
bad,
is it? Yeah.
But I'll tell you what, the second one, the S&P, 158% over 10 years, where you could have put your money into a vanilla S&P ETF
and sat on the banana chair and just knocked daiquiris back all day long.
And got yourself 15.8% a year.
Yeah, you can't argue with the numbers. I mean, they're just extraordinary. And what's going to be interesting, run that chart at the middle of the year if the S&P's at 6,000, and it'd make the 158, probably nudge it up to about 165, because there's plenty of upside there. The horsepower at the moment in US equities is very, very bullish. I don't know how long it lasts for, and I'm not suggesting, but we're still 9 months till the end of the year, and there's a lot of things to happen in that year.
There is. Like at the moment, there's no dark clouds just yet, though.
No,
like,
no, I've got to agree with you.
You'd have to say that soft landing has eventuated. Now, that's not to say something can come out of left field any time.
Yes.
And it may well do that. But as it stands at the moment, there's no real sort of view of a major correction. The market might come back a little bit, which is understandable because it's been pretty hot.
Yep.
But a 20% correction at the moment?
Well, I'm not seeing it or hearing it.
No.
And no one can say it won't happen. But at the moment, looking at it from today's date, moving forward, we've got a big election coming up.
Yes.
That's not far away. You're talking about just over 7 months. So, yeah, buckle up and let's get some of these rate cuts into action, and we'll just have to see whether we get 1, 2 or 3. Some are saying we're only going to get 1 now. And they're voting members of the FOMC as far as Fed presidents of different branches across the nation.
I think what would spook the markets is if there was a reasonable spike in the inflation rate.
Yep.
That would be probably a catalyst.
Well, you don't want energy prices to shoot up.
No.
And what happened over the weekend as far as the terrorist attack in Moscow, whether there's any washout as far as that from a geopolitical stance. I know the oil's up and gold is up. Watches are looking good, Andrew. You might have to go out and buy yourself, and you've got about 14 Rolexes, so you might have to get another one.
Maybe not.
Or your cars, you've got a couple of good cars, you've one of your old Mercedes, and the handbags for the girls at the Birkins. I mean, they're 60, people laugh and they say, well, they're, a dud investment, women buying Birkin bags. Well, they're up 67%, they're not too bad.
No, as long as they're legitimate.
Oh, yes, well, that's right, you spent a lot of time in Asia for Bloomberg.
Yes.
But art's strong, 105%, wine, 146.
I
I mean, they're very strong numbers.
It is. I think I'm an S&P sort of guy, though.
I know you are, and I know you, and I'll have a nip of whiskey for you at 280.
But interesting numbers, that's for sure.
Yep.
Good stuff. All right, we'll keep an eye on the market this week and regroup next week.
Yeah, happy Easter to all of our viewers. And let's see, the markets, the FX markets are open Friday. You got the stock markets will be closed, the majority of the Western world, for Easter. But yeah, FX markets. Just so even, and this is what everyone says, even when the market's quiet, that's when you can see big blowouts. And I just keep your eye on the yen. Not saying you're going to see intervention, but hey, who's to say it won't happen?
Never know. All right, thanks again.
Cheers.
We'll catch up next week.
Thank you.
Thanks, Pete. And that's the XM.com weekly market update.